You are tuning into, well, quite an interesting moment in the crypto world. It's Monday, May 26th, 2025, and things are definitely buzzing. We've got some great info lined up to unpack for you today.
Absolutely. The sources we've pulled together, they give a really vivid snapshot of a market that's clearly making moves. Bitcoin's big climb is really setting the pace.
Exactly. And it's more than just seeing green on the charts. We're going to get into some major corporate plays, look at what the technicals might be telling us, and even touch on the wider economic factors that seem to be adding fuel to this fire.
Yeah, the idea is to cut through some of the, let's say, the noise and give you the core insights into what's happening and maybe what it could mean.
Okay, so let's jump in. Bitcoin right now is trading around $110,080. That's up a decent 2.3% in the last 24 hours. But what's really catching my eye is how broad this rally seems to be.
That's a key point. It's not just Bitcoin. Our sources show pretty much all the top 10 and even the top 100 cryptos are seeing gains. The whole crypto market cap sitting at about $3.58 trillion.
And here's something I found pretty interesting. Even with all this positive price movement, the actual trading volume has dipped. It's down to $95 billion, which is the lowest it's been in days. How does that square up? Lower volume, higher prices.
That's a great observation. Sometimes when you see prices rising on lower volume, it can actually signal, well, stronger conviction from the buyers. It suggests it might not be just frenetic short-term trading driving things up.
Ah, okay. So maybe fewer people trading, but the ones who are buying are perhaps more serious about holding.
Potentially, yes. It points towards maybe more accumulation happening, less speculative churn.
Got it. Okay, beyond Bitcoin, Ethereum's doing all right too, up 3.6%, trading at $2,581. But Cardano, wow, 6th day in a row gains, up another 5.1% to about 77 cents. What's driving that specifically?
Yeah, Cardano's definitely got its own story right now. It seems largely driven by anticipation for the Ouroboros Leios upgrade that's planned for next year.
And that upgrade is a big deal because
scalability, it promises a huge leap, potentially tens of thousands of transactions per second. So it addresses that classic blockchain bottleneck, right? Transaction speed. The market seems to be pricing in that future potential now.
Makes sense. Future tech driving current price.
All right.
All right, let's shift gears a bit. Talk about the big players. Strategy keeps popping up, biggest corporate Bitcoin holder, and they're still buying.
They are indeed. Just between May 19th and 25th, they snapped up another 4,020 Bitcoin, cost them around $427 million for that batch.
Wow, 4,020 BTC. So their total stash is now what?
It's massive. 580,250 Bitcoin, valued at, over $40.6 billion at current prices.
And they weren't exactly getting a bargain basement price on this latest buy, were they? Average price was what, $106,237?
That's right for this recent purchase, although their overall average cost across all their holdings is much lower, around 69,979 kais. But yeah, buying aggressively even above $100, that sends a pretty strong message, doesn't it?
It certainly suggests a long-term belief. How are they funding these buys? It must take some, strategy.
Right. They're using these at-the-market equity programs. Basically, they sell bits of their own company stock gradually into the market to raise the cash. It's less disruptive than a huge single offering.
So selling stock to buy Bitcoin, that really highlights their commitment, intertwining their corporate strategy directly with Bitcoin accumulation. Interesting stuff.
Definitely signals how integrated this is becoming for some companies.
Okay, let's pull back and look at the technicals. Bitcoin had a new all-time high just recently, right?
It did. $111,814 back on May 22nd. And like you said, we're trading pretty close to those levels again today. And technically speaking, this 7-week winning streak is quite notable.
7 weeks straight. That's the longest run since December 2024, I think. And breaking that old record high without much fight, that seems bullish, no?
It generally does, yeah. Suggests strong underlying demand. But, we should also look at the cautionary signals, the sources point out. The RSI, the 14-day Relative Strength Index, it's getting up there, approaching 70.
And 70 usually means potentially overbought.
Exactly. It can sometimes signal that a pullback or consolidation might be coming. Plus, you've got the Crypto Fear and Greed Index sitting in extreme greed.
Right. Historically, extreme greed can sometimes precede a bit of a market cool down, at least short term.
Precisely. So while the overall trend looks strong, you can't rule out some near-term bumps. Keep expectations realistic.
Good point. So caution flags are up for the short term, but longer-term technicals still look promising.
Very much so, according to some analysts. Using tools like Fibonacci extensions, specifically the 100% extension, suggests a potential next target around $130,000. Some are even looking higher, maybe $150,000.
$150,000. Wow.
Yeah.
Because those are some significant potential targets based on the charts. Let's broaden the scope again. What about the macro environment? What wider factors are feeding into this?
Well, there's a real confluence of things, it seems. First, massive institutional adoption. We just can't ignore the impact of the Bitcoin ETFs.
The inflows there have been pretty staggering, haven't they?
Absolutely. Over $2.9 billion just last week into Bitcoin ETFs. Total assets in those ETFs now exceed $128 billion. And remember that one crazy day in April,
Remind me.
one source highlighted a single day where inflows were 500 times the daily average for 2025 so far. Just shows the sheer scale of institutional money moving in now.
That's incredible. And it's not just money flowing in. There's also progress on the regulatory side, perhaps.
Yes, that seems to be helping too. We're seeing real movement, especially in the US and Hong Kong, towards clearer rules for stablecoins, things like reserve management, AML procedures.
Which helps reduce uncertainty, right? Makes institutions feel more comfortable participating.
Exactly. Less uncertainty generally equals more confidence. And then you have the broader economic backdrop.
Like what?
Well, President Trump delaying those big EU tariffs that eased some trade war fears, which tends to be good for risk assets like crypto, and earlier his executive order about a strategic Bitcoin reserve that likely added a layer of, well, long-term validation.
So institutional cash, clearer rules, a slightly less scary macro picture. It all adds up. Let's talk basic economics then. Supply and demand.
Right. And this is fundamental. Sources show Bitcoin supply on exchanges is decreasing. At the same time, demand, especially from these institutions via ETFs, is surging.
Less available to buy, more people wanting to buy it. Economics 101 says price goes up.
Pretty much. And what's also interesting is that the data suggests less profit-taking at these current highs compared to when Bitcoin first broke $100,000.
Meaning people who own it now are maybe holding on tighter, more conviction?
That's one interpretation, yeah. Suggests a belief in potentially higher prices to come, less desire to sell immediately just because it hit a new high.
Okay, let's bring in an expert voice. Thomas Farrer from Apollo had some thoughts on the psychology of this.
Yeah, Farrer made a great point. He acknowledged that holding Bitcoin can be, frankly, frustrating sometimes. It's volatile, right? But he stressed its core design. Yeah. It's deflationary. Its value proposition is tied to that limited supply.
And he used that long-term chart, the logarithmic one.
Exactly. It shows this kind of long-term exponential growth curve, even with all the scary crashes, 2015, 2020, 2022. Bitcoin bounced back and continued on that trend.
So it connects back to that idea of Bitcoin as a hedge against things like government debt, money printing.
Precisely. Given the fiscal situations in many countries, the U.S. debt, central bank policies, Bitcoin's appeal as a potential store of value independent of those systems seems to resonate strongly with many investors, including institutions now.
Okay, looking ahead then, what should we be watching out for this week? Any key events?
Definitely keep an eye out for the Federal Reserve meeting minutes on Wednesday. Any hints about future monetary policy are always closely watched.
And economic data releases too.
Yeah, things like consumer confidence, GDP figures, PCE numbers, the Fed's preferred inflation gauge. All that data can influence market sentiment towards risk assets.
Right. The crypto market is definitely sensitive to those U.S. economic signals. Okay, so let's try and wrap this up. What's the big picture takeaway from today's deep dive?
I think the main thing is, this rally feels like it has more substance behind it compared to maybe some past cycles. You've got the institutional money, the regulatory progress, supportive macro factors, strong technicals. It's quite a combination.
Suggesting maybe this isn't just another fleeting bubble, but potentially the start of something bigger.
It could be the early stages of the next major bull cycle, yes. But again, with caveats.
Like that potential for a short-term pullback we talked about, based on the RSI and greed index. Maybe down to that $102,000, $102,500 support level.
Exactly. Short-term volatility is always part of the game here. A pullback wouldn't necessarily break the longer-term bullish structure.
So it comes back to that long view. Thinking about Farrer's point about the psychology, the deflationary nature, the institutional acceptance.
That's right. Those seem to be the key pillars supporting the bullish long-term outlook, even if the path isn't always straight up.
So the convergence of all these factors, institutional buying, clearer rules, macro tailwinds, strong charts, paints a pretty compelling picture for Bitcoin, despite potential bumps in the road.
I think that sums it up well. It's certainly a dynamic situation that warrants close attention, prompting you to consider how all these pieces fit together.
And definitely makes you think about the long game, the psychology involved, and the underlying value proposition in this evolving landscape. Okay, a final thought to leave you with. As Bitcoin supply on exchanges keep shrinking and big institutions keep buying, how does that change the game for individual investors? What's their role look like going forward in this maturing market? Something to chew on.